Good morning and welcome to our 2024 Payments Megatrends Europe, Middle East, and Africa edition. My name is Lindsay Lear. I am the Managing Director of Payments and Commerce Market Intelligence, and I'm so thrilled you're here with us today. Today is our second edition, our second series in our Megatrends 2024 Megatrends event that we hold every year, and we're thrilled to be bringing you insights from EMEA today. You may have caught us yesterday reviewing the Americas. If you're new here, welcome. This is, an event we hold every year, and we're excited to kick off 2024 with these insights and two fantastic speakers and a lot of insights for this region that we're very excited to share with you today. So just a quick overview of PCMI in case you're new before we get into our content today. If we move ahead, very quick legal notice for everyone. Please take the information shared alongside many other sources and always using sound business practices when making any decision. And we'll just give you a little bit more information on who we are for those of you who are new here. If we go ahead, many of you may know us at PCMI. We are the leading market intelligence firm for the payments industry around the world. Our founding members have over 30 years experience in market intelligence services, essentially helping companies make the decisions they need to make in this industry that is constantly changing, constantly being disrupted by technology, by changing consumer trends, by regulation, etc. I myself have been razor focused on the payments industry for the last 10 years, looking at trends, looking at consumer behavior, looking at industry development. So we will be diving into what is going on in the industry in the EMEA region today. And if we just go ahead, I just want everyone to have a visual of where we operate. Some of you may know us as having deep experience in the Latin America region, but in the past several years, we've been expanding our presence around the globe. And today we have a PCMI team sitting in 13 global markets, covering over 50 countries around the world. And one more slide ahead, a quick overview as to what we actually do at PCMI. These webinars and sessions, we love to share with our network all of the things that we're learning and seeing to help you be prepared to meet the demands of your job and your industry. But we essentially help companies make those strategic decisions they need to make to be at their best. Understanding which opportunity might be the most advantageous to invest in, which market to enter and how they want to do that, which company to acquire or partner with, and determining how to pivot are all the types of questions that we routinely help our clients with. Okay, if we go ahead one more. Fantastic. So I'm so thrilled to introduce our two speakers today. I'm going to start off with Mikhail Popov, our EMEA lead here at PCMI. Welcome, Mika, as we like to call him.
Hi, Lindsay. Thank you very much for your presentation. And hi, everyone. Thank you all for being here. My name is Mikhail Popov. I come from Argentina, currently in Barcelona, Spain. I'm a senior analyst and EMEA lead at PCMI, as Lindsay mentioned. I'm specialized in payments, blockchain, and digital assets. And it's a pleasure, of course, being here. Thank you all, and I hope you enjoy this webinar.
Thank you, Mika. And I'm also so thrilled and honored to welcome Uttam Nayak, our EMEA special guest today. Uttam, thank you for being here. Uttam, I think you're on mute.
Yes, sorry.
There we go.
Unmute. Yeah, thanks, Lindsay. I'm really happy and thrilled to be in the first PCMI webinar, and I'm looking forward to this session. I'm looking forward to working with you, Mika. As Lindsay said, I've been a payment specialist for the last 3 decades. I've worked primarily for 27 years in Visa in multiple roles around the world, right from Singapore, India, South Africa, and Dubai, and have worked on not only consumer payments but as well as money movement and digital payments as well. And so I'm looking forward to this webinar today and talking to all of you.
Terrific. All right. Well, thank you both. And let's go ahead and dive in here. So before we get into the details of the actual mega trends, we want to just take a few moments to set the stage, right, and provide the context. We are attempting to cover 3 very distinct regions today. Why they're grouped together is a mystery to me, but Europe, Africa, and Middle East, of course, are interconnected regionally. They're, proximity-wise, immigration flows, business flows, and so the trends that we see are quite similar, yet at different stages, and that's something that we'll observe throughout the context of our slides today. So if we just go ahead and just take a look at putting this region on the global stage. When we're thinking about payment methods and payment method share is always something I like to look at as a good bellwether as to where countries are in their digital development, especially in e-commerce, right? So what we see here is the breakdown of payment methods in e-commerce projected into 2026. This is data from WorldPay by FIS, as well as some PCMI analysis going into this as well. And what we can see when we look at Europe and when we look at EMEA is an interesting ongoing competitive battle between cards, wallets, and increasingly A2A payments, right? Now, wallets in many cases are going to include Apple Pay or PayPal or Google Wallet, which of course include card rails as the underlying funding source. But what we can see in Europe, we'll observe that wallets and cards are going to be very, very close. Cards will continue to lead in EMEA and Africa. And it's nice to just see how these stack up against other regions in the world. But as we go on to a little bit more detail, kind of unpack this a little bit more, we can see on the next slide these changes that are occurring in Europe. Okay, we know Europe to be a developed market. We know Europe to be a leader in terms of regulation around faster payments, around open banking, in many cases, a highly banked region. But of course, within Europe, we have a lot of differences in diversity. But as a whole, when we look at e-commerce and POS, a couple of trends we can observe. The first is a distinct and continual decline of cash, right? We see in the yellow boxes there on the bottom, cash as a share of POS payments continually decreasing down to 15% through 2026. We also see a trend of declining card share. Cards are still the leaders as they are in most regions around the world, both in e-commerce and in-person payments. But this trend is starting. These payment methods are starting to see competition from wallets and also faster payments, real-time payments, or what we call A2A, account-to-account payments. So we can see that trend occurring both in e-commerce and POS. And this is something that battle between account-to-account, wallet, and cards is going to continue to play out in the next couple of years. Okay. If we move on to looking at EMEA, of course, EMEA combines both the Middle East and Africa, which is really tough to do. You've got highly banked and affluent markets in the Middle East. You've got a huge diversity across the African continent. But when we look at this region as a whole, we again see a couple of interesting trends that we want to call out. Again, an even more pronounced decline of cash, okay, at the POS, going from 43% in 2022 down to 20%. That's a loss of 14 percentage points in the span of 4 years. So Africa, of course, very heavily cash dominant, large unbanked population still. But with the digital changes that we're observing, we see cash really declining in an impressive way. Now, where are those transactions flowing to? We actually see continued growth of cards and a growth of digital wallets. So within Africa, we see digitization sweeping the region and kind of raising all digital payment methods. Okay, we can expect growth across almost every area of digital in the region in the next several years. When we look at e-commerce, we're seeing actually the rise of cards are starting to perhaps lose a bit of share as we have more alternative payment methods being viable options and more people participating in e-commerce beyond just the affluent who have had cards for a long time, maybe using a mobile money wallet or some other type of payment method, an A2A wallet, that is enabling them to get online for the first time and make those purchases for the first time. So just a couple of differences and the key callouts to get us situated as we prepare to go a little bit more in depth. So I think we go ahead. And at this point, I'm going to turn it over to Mika to start diving into this very exciting and complex topic of account-to-account payments, or RTPs. We kind of use them synonymously. And so I'll turn it over to Mika to dive a little deeper.
Thank you, Lindsay, for the introduction. So the first thing that I wanted to mention is Okay, yeah, of course, this is a huge and a predominant trend in Europe and all across the different regions. And if we move forward with the next slide, we will start seeing what's going on actually in Europe with a different account-to-account schemes. And here, Europe is a clear example of the early adoption of the different account-to-account schemes, mostly used for peer-to-peer transactions and transfers, and with an increased adoption in e-commerce payments as well. So several of these schemes, as we may see, have leveraged the infrastructure of SEPA transfer rails, which are really well known in the European region, in order to implement these solutions and in order to enhance the solutions, as for instance, the case of Bizum in Spain. On the other hand, we can also see that despite some of these schemes being in the market for several years, adoption continues to increase. That is something to highlight, because with both the number of users and transactions rising year after year, we'll see this trend continue for the next years. And moving forward, going ahead with the next slide, we will see that this is not actually the novelty. I mean, the novelty really here in account-to-account payment schemes lies in the evolution of these schemes. Well, we will start seeing the implementation of a new regional schemes for cross-border transfer. This is huge, because this is the case, for instance, of the recent agreement last year between Bizum, Banco McPay, and MBWay, which will implement an interoperable transfer scheme between these different systems actually, allowing users from these different schemes to make instant payments among them. Okay, so this is really interesting, because in addition, we have the case of another schemes, and specifically the case of the announcement of the new Wero scheme, the new Wero wallet, which will be initially implemented for transfer between Belgium, France, and Germany. And one last thing is, I think that this is the most important and to highlight here in this slide, and we are going to talk about this in the next slides as well, relates to the regulator stance, okay, which is crucial as well, all known. And very recently, in February this year, a new regulation actually was approved that requests PSPs, banks, and fintech to offer instant euro transfer to the customers mandatory. Okay, so this is new. So this is really important, and this indicates the regulator's intention to continue promoting the adoption of instant payments and account-to-account services. Okay, and to increase also the addressable market for euro transactions. This is the most important thing to highlight when we talk about account-to-account schemes in Europe. Okay. So now that we actually move forward with Middle East, we're going to change the region, and we are moving to Middle East to talk about what's going on here. Okay, so moving forward with Middle East, as we mentioned, this trend, it's worth mentioning what's happening in terms of infrastructure. Okay, as in recent years, we saw actually the implementation of new rails in various countries, aiming to promote the development of real-time payment solution and transfer across the Middle East in different countries, as I mentioned. And the most relevant case leading the initiative in terms of growth and adoption of real-time transfers is Bahrain. Bahrain, whose real-time payment system, promoted by its central bank actually, has been a success and is expected to continue increasing in the upcoming years. And here I would like to hear the opinion of what he has to mention about this from Udam. And I would like to hear about this. What do you think about this trend and about this growth in terms of infrastructure in Middle East?
Yeah, thanks, Mika. You're right. You know, the trends which started off in Asia and Europe on real-time on instant payments has now finally hit the Middle East in the last couple of years. Obviously, you can see on the slide there, Bahrain, which is a small country of 1 million people, the central bank and Fowry really set the ball rolling on real-time payments and has very high digital penetration through a couple of companies like Benefit and others out there. But it took some time, and then a couple of years back in 2021, you should say on the previous next slide, 14. Yeah, and 2021, you see Saudi Arabia, working with VocaLink, actually launched RTP systems, and they're now in the process of getting their banks to migrate, and with mobile phones penetration being so high, they've started with P2P services out there. And most recently in 2023, which is last year, as many of you know, the success of India's UPI has been so well recognized, and they have taken what they call the India stack and offered to already 9 governments around the world, and UAE is one of them. And the Indian Prime Minister and Sheikh Mohammed launched this a couple of months ago. So it's called ANI. So very clearly started off in Bahrain, went to Saudi Arabia, and then of course to UAE and RTP systems. In parallel, you have Kuwait, which has a domestic scheme and a consortium of banks called KNet. They provide instant P2P services, but they use the card rails. And it is processed as e-commerce transactions. And I think almost 100% of the P2P is using this platform, and it's using a mobile application linked to the mobile banking of their respective banks. And of course, Qatar, did a big push when they hosted the FIFA World Cup last year to use really QR codes and use instant transfers from account to account. So that's a significant shift happening out here in the Middle East, led by these GCC countries.
Amazing, amazing. Thank you very much. And if we move forward with the next slides, we will see that while these central bank rails are just emerging, I mean, when we look at and analyze some of the solutions and wallets in the Middle East, we see cases like STC Pay in Saudi Arabia, Benefit Pay in Bahrain, that have managed to penetrate the market. And these solutions, this is happening as well with Karim Pay, as we discussed previously. And I would like to know more about these. I mean, these solutions, which have been in the market for a few years, have also managed to feel like the infrastructure gap that actually that were left by central banks so far. What do you have here to mention about this?
Yeah, banks have been very slow in really going onto the digital bandwagon, and the 3 players here, STC Pay kicked it off in Saudi Arabia. STC is the largest telecom company in the Middle East, and they launched a subsidiary to do payments. And they focused very much on domestic P2P and cross-border, transfers to the Indian subcontinent and places like Egypt and Pakistan, with very low FX and significant promotions. And as you can see that in a few years, they've captured 30% share. Benefit, as I told in the previous slide, was launched much ahead of these, other 2 wallets on the screen, and they've got 84%. Virtually everybody, if you're going to Bahrain, is having a Benefit wallet and doing payments, and particularly domestic payments out there. And Karim Pay, which started off as a taxi company, ride-share company, which was acquired by Uber, by the way. Karim is owned by Uber at point of time, Karim Ride. They also launched payments through a super app, and they focus on local domestic shopping, and particularly food delivery, and now slowly getting into bill payments and transfers as well. And on the right, on the back of these 3, you have a number of small ones popping up. Etisalat, which calls itself E-End, another large mobile operator, or Ooredoo, and then a couple of fintechs like Clip have come in. So there's clearly a shift away from cards to paying with wallets in the Middle East right now, and many of them talk about instant payments. It's really instant movement of money from account to account or card to account.
Amazing, amazing. Thank you very much, Utam. And moving forward,
Mika, before you move on, I wanna ask Utam one more thing here on this slide.
Sure.
Is, Utam, yesterday in our Americas webinar, we had 2 Brazilians presenting. They commented how they couldn't believe what life was like before Pix, right? Pix has only been around for less than 4 years, but it's been so transformational. So I just want to ask you, as someone who lives in the Middle East, based in Dubai, and you're of a particular demographic, right? I'm sure you have a number of different credit cards, but Are you using any of these on a daily basis, or do you see your friends and family using these payment systems?
Yeah, I use Kareem Pay every day. I obviously order food. I don't drive. Dubai is very, has quite heavy traffic. So I use taxis all the time. So I use Kareem Pay taxis, and I use it for all the bill payments out there. Occasionally money transfer. But I have a lot of friends who use STC Pay in Saudi Arabia to transfer money, because to drive adoption and change in behavior of walking to an exchange house and sending cash, they're doing a lot of motions as high as sometimes 5% cash back. So if I send $1,000 home using STC Pay, I get $50 as cash back. So I see clearly the shift away from cash to account for cross-border remittances, or paying for the groceries or cash food or ride share using Kareem Pay. Yeah, so I see that shift very clearly. And I myself, I don't remember now using a card or walking in with cash in Dubai for the last couple of years ever.
Impressive. I love those anecdotes to really kind of give it a real life flavor. Thank you. We can go ahead.
Amazing. And now this whole trend around account to account and wallets and real-time payment schemes becomes very, very interesting when we start talking about Africa. So the recent story of digital payments in Africa is strongly marked by the presence of mobile money wallets and mobile money operators. Yeah, so which have financially included and digitized a large portion of the population for the past 10 years. So despite this, in recent years, we can see an overlap between the population that holds bank accounts and those who only have accounts in a mobile money wallet or another type of wallet. Okay, this tells us that mobile money wallets are currently serving both bank and unbanked individuals, which is something important to highlight. Nevertheless, we still see that we have this impressive figure of 400 million people who are still outside of the system, which represents a great opportunity for industry players, and we're going to talk about more about this in the next slide. Moving forward, please, with the next one. Yeah, well, here what we have is something that it gets more and more, even more interesting when we move forward, because this is not just a story of mobile money wallets. Okay, Africa is not just a story about mobile money wallets, because banks and central banks are also trying to implement their own account-to-account and RTP schemes. And as we can see on the map, Africa in this regard is fragmented. We have cases like Ghana, Nigeria, whose schemes have penetrated deeply into the population. However, on the other hand, we can see that in the southern and western parts of Africa, schemes launched more recently are still struggling to achieve considerable adoption among the population. Okay, so in this sense, and implicitly recognizing that mobile money operators have found a place in the market that banks have not been able to reach, many of them have adopted a partnership strategy, which is really, really interesting, with mobile money operators to avoid losing market share and leverage the infrastructure of the different mobile money operators to get closer to the end user. I think that this is something that it's amazing, because understanding this, we can see that this has somewhat reshaped the design of the competitive landscape in Africa. And depending on the perspective, banks and mobile money operators are considered competitors, but from another completely and totally different angle, they are partners. Okay, and they can adopt both the strategies. Okay, so I don't know, Dan, if you have something here to mention, but I think that it's really interesting to.
Absolutely. There's Africa is one place where you can see the best of the, success stories on digital payments, right? Kenya with its M-Pesa success, where I guess is the first place in the world where small merchants were getting cashless payments using the M-Pesa wallet. And that became the gold standard, which got replicated in many parts of Africa. So Kenya, as you see, the central bank realized you need RTP, and they launched Pesa Link in 2017. But people are so habituated. You saw on the previous slide, nearly 91% of the population has M-Pesa wallet. So RTP is just less than 1% penetration. So cash displacement and had happened through mobile wallets, and RTP systems are the one launched by the central bank after like 6 or 7 years is still at 1%. The other extreme is South Africa at the bottom, which forever was dominated by cards and the two card networks, launched RTP very late in 2023, and they have less than 1% penetration because either mobile wallets is used or cards is used for transacting at a point of sale or for money transfer or bank accounts. So RTP is not taken off. On the West Africa side, here's the sweet spot. Card penetration and merchant penetration is not so high in Nigeria and Ghana. And mobile wallets has taken off, and then the central bank launched their RTP system, NIBS, 45% share in less than 10 years, and likewise in Ghana of 39%. And these are markets where you see it really, you walk into a small street and you see street vendors take NIBS and JIP payments, and people don't use cash at all. And, and these countries are not especially safe for carrying cash around, and the success of RTP systems is seen. The other point which Mika said is very clear. Banks are feeling completely disintermediated. And you see in the case of in Kenya, KCB, the largest bank, has really now tied up with M-Pesa to really offer a mobile wallet with bank branding, but really riding on the M-Pesa rail. So, banks and mobile wallets forever were seen as competition. But now suddenly in the last, couple of years, they've become partners with the mobile schemes as well as the card networks. And you can see MTN and Airtel, in fact, have investments from one of the card networks. I think it's MasterCard. And they made significant investment to even see how the wallet network can integrate with the cards network, especially the point of sale for paying for merchant purchases.
Uttam, thank you for that overview. I agree that the case of Kenya and M-Pesa is so fascinating. I mean, 91%, that means a lot of banked customers are using M-Pesa. So, and my question is, do you see, this KCB partnership almost a banking as a service type of model? Do you see that being replicated, or is that kind of unique to M-Pesa in this one bank? Do you see that being a trend that we'll start to see more and more? I mean, M-Pesa is increasing its presence around the region, and of course there are other players. What do you think in terms of that model replicating?
Lindsay, it's a great question, right? In Kenya, you cannot operate and retain customers if you don't partner with the mobile wallets. And M-Pesa, obviously, it's Safaricom dominates. And most banks have gone into some sort of a partnership. Either it is for salary accounts, or is it for loans, or only for cash in, cash out, or all the services M-Pesa offers. And this is the trend which is picking up, where banks are forced to look at that partnership. In Kenya, it's more compelling case for banks, and not so much in the other countries because they still have card footprint and ATM footprint. But it is acute in Kenya, and you cannot operate and hold on to your customers if you're not operating the M-Pesa ecosystem.
Great, thank you.
Amazing. And well, just jumping to the next slide. I think Lynn, here you have something to mention to the audience.
Yes, perfect. So that was kind of a view of we mixed in cross-border a little bit there, but a view of RTP and A2A development around the region. We're going to jump from there and evolve into cross-border, which is going to be even more complex and interesting. But before we do that, let's go to the next slide. And I just want to take a moment to poll all of you who are tuning in today. We at PCMI, again, we strive to make our insights and our learnings constantly available to you, whether that's in the form of a paid research engagement or a conversation and a consulting meeting to get to know you better, get to know your needs, and figure out what is it that you want to learn about. So we would just love for you to take a moment to answer this question. We want to know, after this webinar, how would you like us to engage with you? Do you have a concrete need that you want to discuss with us? Do you want to learn more about PCMI in general? Are you interested in talking about these trends a little bit more in depth and hashing them out with us, which is completely available? Or are you kind of sitting on things and would like us to reach out to you at a later time? Just take a moment to answer that, and we will follow up accordingly. We love to know who is tuning in and how we can continue to add value. So we'll just take another about 10 more seconds. Give everyone a chance to answer that. Looks like we still have people answering. I'll keep giving it another 5 seconds and then we'll continue with our content. All right, great. We can close that. Thank you, everyone. And please expect us to follow up accordingly within a week or so. All right, so thank you. And let's get into our cross-border content, starting back in Europe. Micha.
Thank you, Lynn. And well, moving forward, as we now are jumping in the cross-border and remittances topic, as we mentioned earlier, regarding cross-border transfers this year, we will begin to see some implementation of regional account-to-account schemes. This option seems to be most attractive for traditional financial institutions, which actually seek to prioritize the development of solutions with fiat currency. And what I'm highlighting this because, on the other hand, we are starting to see the stablecoins that comply with the standards of the new European regulation on crypto assets, allowing the development of new solutions for cross-border transfer using blockchain technology. And this is an example that the new stablecoin launched by Circle this year, which is URC, which basically aims to boost peer-to-peer transfers across European corridors. So this is a clear intention on like a specific use case for these new regulated stablecoins. And once again, we see how here in Europe, the regulator, through the market in crypto asset regulation, provides and promotes a framework of rules through which industry players, including banks, can offer cryptocurrencies and stablecoin services, such as wallets and custody services for users. I mean, this is something that we will surely start to see sooner rather than later in Europe. I mean, with major institutions getting involved with cryptocurrencies and blockchain, both on an institutional level and in terms of services and solutions offered to the users. In fact, actually, many neobanks are already starting to offer cryptocurrencies, transfer, custody, and exchange services, such as Revolut and N26. Moving forward,
Yeah, I have a question for you here, if it's okay before we move on. You know, I know that financial institutions are typically have been very wary of crypto, right? In most cases around the world, regulation doesn't allow them to, you know, furnish crypto services to their customers. Now, of course, this is related to a stable coin, but I'm just curious as to your thoughts of, is this really going to be adopted and applicable by traditional financial institutions? Is this something that's more attractive to fintechs and neobanks? Where do you think this is going to have an impact?
I think that, I mean, for neobanks and fintechs, they are more attracted to offer this type of disruptive and more techy solutions using new technologies. I mean, as I mentioned, Revolut and N26 are two, and both of these institutions are like neobanks and fintechs. So I think that for fintechs is more attractive and to start offering these type of services because of their of the message of the type of user they want to capture, mostly focused on younger generations. But on the other hand, I think that most traditional financial institutions are trying to innovate first and foremost from an institutional perspective. I mean, using blockchain for internal purposes or internal operations, or maybe for proper investment for the bank. I mean, and on the other hand, they are more reluctant on start exploring these type of solutions for users. So they are not like with this alignment or this or this idea or this plan to start, okay, yeah, we want to offer a disruptive, now we want to jump directly to offer this disruptive solution or implement crypto or offer a solution. They are more like a conservative. They have a more conservative stance. So this, in this case, we can see a difference between the approach of the fintech and the neobanks and the approach that they are taking, actually the most traditional and financial institutions. And let me add something. I mean, most of these banks, at least in the case of Spain, for instance, they just release, or they just founded their own digital and neo banks. I mean, we have the case of the CaixaBank, for instance, in Spain, that they are not offering cryptocurrencies or blockchain or stablecoin solutions yet, but they are trying to to implementing this, or they are trying to go to market with these new brands or these new and own digital and neobanks, just to trying to capture with these fintech or these neobank brands these younger generations to offer these disruptive products.
Great, thank you.
Amazing. Okay. So now if we jump to the next slide, I think that we will see something that is really, really interesting. And one of the points that has generated the most interest regarding cross-border transfer in Europe is the new instant transfer system integrated with SWIFT. Actually, this system already will allow, through an automated fund system, instant transfer to and from Europe. This is important because this will significantly improve transfer execution times, traceability, and above all, SWIFT competitiveness. Okay, so this is something that is worth mentioning. If we have to mention something about what's going on in terms of CBDCs, I mean, a topic that has been a discussion topic in 2023 are CBDCs, or central bank digital currencies, and especially their potential use cases. So here, what we are seeing relevant cases of pilot tests for cross-border transactions in other regions, such the Enbridge project in Asia, for instance. But however, here we have to mention the case of digital euro, which is currently in development phase. While the European Central Bank has stated that actually use cases for cross-border transfers and payments outside the European Union are on the agenda in the roadmap for its implementation, the priority will be its implementation and domestic use cases first and foremost. I think that, Uttam, I don't know if you have something here to mention, because I think it's really interesting about the case of SWIFT and what's going on with CBDCs in this sense.
Yeah, I mean, SWIFT is the cross-border platform for banks, but a lot of the cross-border remittances in this part of the world happen outside the banks now because of instant transfers being available to Indian subcontinent, India, Pakistan, Egypt. All of them have RTP systems, and most of the remittance companies, or exchange houses, they call it, are able to do a direct point-to-point connection because of scale. So they don't depend on the SWIFT network. Instead, go directly, have a bilateral relationship, and have managed counterparty risk and liquidity, and are able to achieve that. So I think there's a parallel, instant transfer cross-border ecosystem being set up. As far as CBDC and digital currencies are concerned here, I think the central bank is still looking at Europe, and I think it's a couple of years away. The max we see is people investing in them, using their cards to fund their wallets, and which they maintain in Europe, and when they cash out to a wallet like TransferWise or one of them, and then move the money back through banking channels. So not too much on digital currency, but a lot of action. You will cover some of that later on the cross-border front.
Amazing. Thank you very much. Here, and we can jump into the next slide. We will continue talking about what's going on in Middle East. I mean, here I would like to listen to you, Tom, because another trend that we see, and this is something that we will see across all across all regions actually, has to do with the emergence in the Middle East of real-time transfer schemes promoted by banks and central banks that are actually regional. I mean, such as the case of Buna, which aims to streamline transfer between countries in the region. Here, what do you think or what you perceive about these regional schemes?
Thanks, Mika. This is a trend which is going to pick up around the world, right? One is the sanctions imposed by the Western countries, which could suddenly, cut off your SWIFT network or suddenly freeze your bank accounts. So there are two big initiatives here in this part of the world. One is Buna, which is the Arab countries. If I remember right, there are about 19 or 20 Arab countries, right, from Saudi Arabia and UAE to all the way to, I think Egypt, Tunisia, Morocco. All these countries have come together to create a network of money movement between, cross-border money movement between the Arab countries. And it's backed by the Arab Monetary Fund, and they have their office in the Arab Monetary Fund in Abu Dhabi here. And their aim is to set up their own standard and network for mimicking cross-border transfers operated by SWIFT, but instead it's in real time, and they manage the clearing and settlement. So there's no dependency on any international network or international schemes, and they're isolated from. Within the Arab world, there's also GCC, which is more contiguous, right? Saudi Arabia, UAE, Qatar, Oman, Bahrain, and Muscat. They have got together and also created their own network, not only for cross-border remittance, but also for wholesale transactions. And that's also been launched from 2020. And again, these two are all, backed by the governments, backed by the central banks. And most of the local banks participate, and they're built as an alternate to legacy systems and an alternate to international platforms. And this is the direction you will see many parts of the world, particularly Africa, follow, so that they're not at the mercy of somebody else sitting in Washington or somewhere else taking decisions on your cross-border network.
Tom, I have a question on this. Of course, we can absolutely see the practical uses of more regionalized systems that aren't dependent on external players. But I wonder, is there also a cultural or identity related phenomenon here? I think we've observed around the world the rise of national pride related to payment systems and a nationalistic agenda. Do you think that's occurring?
Yes, very much. Every country is now building their own national payment scheme. Every country wants to have their own national real-time transfers and have their own cooperation with friendly countries. And that's very much, and in fact, Buna is Arab pride, and every government leader and every bank CEO talks of it. Having said, Lindsay, it's easier said than done. So there's a lot of hard work to set the standards, make sure you define the product roadmap. Compliance is very important, because this is cross-border money movement, and these are not the best of countries when it comes to, complying with global transparency, requirements. So a lot of work to do, but investments and the effort in the right direction. And overall, it'll, I think, improve the, sanctity of the ecosystem for money movement, because everybody is now getting involved versus a few players, which happened to be the case until about a decade ago.
Right.
You see Buna has 100 participating networks, and GCC has almost all the major banks in the 6 countries. And yes, it is pride and, independence from, other countries, and it's national pride, as you said.
Yeah, and I think that's, first of all, interesting and also important to note, because those human emotional elements can be very hard to compete with, even if the user experience isn't there, or even if there are other challenges, that's a intangible that sometimes we don't account for. So I think that's fascinating. Let's go ahead.
Excellent. Yes, going ahead, moving forward with the next slide. Here, well, we move and we take a flight to Africa again, and I think that here, as the title suggests, this battle that we already mentioned between banks and moving money in Africa is also evident on the continent, where in recent years regional cross-border RTP schemes have been launched following the trend that we already seen in Europe and the Middle East, as we already mentioned. Here, as we have shared, without much success, I have to say, yet, these different schemes, these different regional schemes have not gained much traction in terms of volume. So this is something that, of course, it's concerning most of the central banks and banks, because the intention is to implement these new schemes in order to improve the cross-border transfer and remittances offering. So, however, on the other hand, if we can see in the right part of the slide, we see that mobile money operators have not wasted time, and actually they have been able to develop their solution that allow their users to receive and transfer money cross-border. Okay, this is the case of M-Pesa, which actually they released their option for international transfer that is called M-Pesa Global. And the case of Orange Money is interesting as well, because through this international money transfer service, they offer users the possibility to transfer and receive money even from other mobile money operators, which actually this allows interoperability between different mobile money operators. This is not the only thing that's going on in terms of cross-border in Africa. I mean, if we jump into the next slide, we will see what's happening with fintech landscape. I mean, because we will see that fintechs are leading the way for exporter in Africa. Please, we can move forward with the next slide. We will see that I'm mentioning. And as we mentioned, actually, what's happening in Africa is extremely interesting due to the different types of players who see a great opportunity to provide solutions and developments to reduce, to reduce the transfer cost of sending and receiving remittances. Okay, so in this slide, we can see how different fintechs of all kinds are offering different types of solutions in the structure and in the flow of cross-border payments and remittances. I don't know, for instance, we have the fintechs providing front-end solutions for specific corridors like UK Africa or US Africa. And we also have companies using blockchain technology to reduce transfer costs. Finally, we can see that there are fintechs that have positioned themselves like really very, very strongly in providing the necessary infrastructure and back solutions to facilitate this sending and receiving remittances in the continent. Okay, so we have the case of TerraPay, MFS, and Thunes, which are large fintech providers in cross-border ecosystem. So Udam, I think that you may have some comments here, and that's worth mentioning what's going on in fintech landscape here in Africa in terms of remittances and cross-border payments.
Yeah, Mika, as you said, right? One, there is ecosystems, for cross-border movement created by regulators and governments, which you showed in the previous slide. There were 3 players, and they're all like Pepas and others. And they take, as you said, volumes are not picked up, but standardization and the adoption of that, by the banks and the corporates will take time. But in parallel, as you said, the mobile wallet infrastructure is so mature in Africa, and they have so much of reach that even cross-border remittances have migrated away from banks. So if I have to send money from Saudi Arabia to Kenya or UAE to Kenya or from London to Ghana, bank accounts could be more expensive through SWIFT and could sometimes, not have clarity as to when the amount will land at what stage as the transaction progressed. And the mobile companies have now started working with players like TerraPay, MFS, and Thunes, who provide an ability to track the movement of money at every stage. And they in the case of TerraPay, they talk of 99% of transactions making it instantly into the recipient's mobile wallet. And they provide not only certainty, but an ability to track the transaction and transparency to the FX rates. And they are, like, as I said, TerraPay is an example. They're connected to 7.5 billion endpoints or bank accounts and wallets. And they're connected to each one of them, not only for real-time transfers, but also they do FX and liquidity management to make it a seamless experience. So mobile wallets are really the target for sending money because, as I said, everybody, whether it's a landless laborer in remote Kenya or the richest guy in Nigeria, all of them have a mobile wallet and they can receive money. And the beauty of this is they receive notification on the phone handset in their hands. They don't have to log into mobile banking. They don't have to log into online banking to see the receipt of money. Instead, it pops up as a notification. And we've done so much of research, when I used to work in a card network, there's no more joy than receiving money cross-border instantly and seeing the credit on your phone. Nothing gives a citizen in Africa more joy. And that's thanks to these technology or fintech companies on the screen.
I love that illustration, Utama. It's so true, both for the sender and the receiver, knowing that just that peace of mind and knowing that transaction went through. I think that's so true.
Lindsay, I'll interrupt you here. You're prompting me to give an example, which I used to quote a lot
Yes,
in research.
please.
My grandfather was moved from the village in India, in southern India, to the western part, which is like 1,000 miles away. And he was a taxi driver in the 1940s. And when he had to send money back to my grandmother in the village, he didn't know whether it will make it to her or not. So what they used to do is they used to cut a currency note into half. So the train or the bus who goes and a colleague or a friend from the village is given that one half, and he sends that across. And then she sends a postcard with the currency half number and sends it back. And then he sends in the next trip the other half. And then she's able to paste it together and go and buy what she wants. And just imagine if my grandfather and grandmother were alive today, he didn't have to do that
Wow.
and wait for months. Instead, my grandmother could have a phone, which is USSD or a smartphone, and then he can send money in instantly. So, I think about it and I say, wow, what a transformation the world has gone through from the 1940s to now. And to me, this is an example of what technology has achieved,
Thank you for sharing that. I love that. And just a reminder that these things actually impact people's lives in a big
Absolutely.
way.
Absolutely.
And just to summarize what you were saying, from what I understand is kind of these mobile money wallets, which have become very pervasive, have done a fantastic job of digitizing, right? And are acting almost as like the last mile distribution. Whereas now we have these infrastructure players that are providing the rails for those endpoints to be accessible all over the world. And I risk running into our next section here before we run out of time, but I do want to, there's a question that I think is so related, and Wissam, you'll be able to address it. Can you elaborate on back-end services for cross-border infrastructure for money movement? You mentioned a couple already, but if maybe you could just take a stab at elaborating on that.
Yeah, so the three things, right? One is onboarding, onboarding to make sure KYC and AML checks are done well. And the number two is sanction screening, right? You can't do cross-border money movement without doing sanction screening, and it's very strict around the world, which is imposed by BIS and the other, regulatory bodies. So that's, that heavy lifting is done actually by the likes of TerraPay, MFS, and Tunes. So the mobile wallets are just the last mile delivery or store of value, as you said, Lindsay. But all the requirements to make sure it's a good transaction from a regulatory standpoint, money laundering standpoint, or sanction screening standpoint is taken care of by these companies. And they put a lot of infrastructure and software around it to do it real time, to check Lindsay is a valid citizen and, she's having a valid bank account when she receives money is taken care of by these companies.
Thank you. Perfect. Terrific. Okay, let's move ahead.
Let's jump to the next slide so we can move forward with the last of our trends. I don't know here, Lizzie, if you have something to mention before we jump in to explain the next details.
No, let's go right ahead. Jumping into data,
Amazing.
open banking, data and identity.
Amazing. Okay, moving forward, here we are going to talk about our last trend that we are covering in this webinar. I mean, when we move forward with the next slide, we will see that what's going on in Europe in terms of data and in terms of open banking. Open banking in Europe has become a reference, not only at a regional level, but also globally. I mean, okay, several regions are taking Europe's example in terms of regulation because they managed to lay the groundwork for the emergence of new players in the market, new fintechs, and these include not only the regulated third-party providers, but also new fintech wallets, lending platforms, and different financial services providers that have actually benefit from access to user data that previously was held only by banks. Okay, so this access enables offering users better financial products. That's the largest effect of open banking in Europe, as we may see in the illustration. And regulation is continuing evolving. So this year we will see the enforcement of an update to the Payment Services Directive 2, the PSD2, which aims to provide certain technical aspects of how financial institutions share their data. We can move forward and jump to the next slide. We will see what's going on in the Middle East. I mean, in the Middle East, something very interesting is happening in terms of open banking, because the trend in each country is to move forward in establishing a framework that allows for clear rules in the market for open banking. Okay. However, I mean, despite the optimistic projections for the coming years in terms of emergence of new players, we are still seeing that adoption is limited. Okay, and apart from Bahrain and Saudi Arabia, we have not seen yet a boom in open banking. Okay, we'll see what's going to happen in the next years. But one thing to note is the emergence of new and relevant platforms and players like Taraboot, which have positioned themselves strongly in offering solutions for banks and fintechs in the Middle East for open banking solutions. Okay, so if we move forward, we can just mention what is happening in Europe and Middle East when we talk about digital ID. And this convergence between digital ID and payments, we understand, and without a doubt, that Europe and the Middle East are leading the way in implementation of such solutions, especially in the Middle East. Okay, so for instance, we have the most relevant cases of the UAE and Saudi Arabia, which have officially launched in the last years, their respective national identity apps or platforms. So in order for the users and the population to access public services and also services from the private sector. The case of UAE Pass, for instance, has been really, really successful in its implementation, and we can also tell us more about this. And wallets and different wallets have successfully integrated it into their system. Okay, and in the case of Europe, once again, the European Union is setting the pace through regulation, as we saw in the last trends. Because just recently, I mean, an agreement was actually reached on the European Digital Identity Wallets regulation, and this established a legal framework for EU digital ID. So this has several implications for industry, but basically both big tech companies, banks and fintechs and other players will have to adapt their system to allow validation through this new wallet. This is the most interesting stuff around this topic and this trend in Europe and Middle East. And just to end, and I would like to hear Lutam's comment on this trend. Moving forward in the next slide, we will see what's happening in the case of Africa, that we are also observing the presence of mobile money wallets and mobile money operators in this matter, where actually thanks to their infrastructures and developments and through the validation processes of SIM cards and telephone number registrations, different mobile money operators are creating digital IDs for users. I don't know, Dan, if you have something to mention here around Middle East and Africa developments, also in Europe, what's going on?
Yeah, in the interest, I'll just make two comments, right? One is open banking is not too prevalent out here. for payments or for payment initiation or account verification, account AIS. Where it is useful is Saudi Arabia has been, Tarabat, that we talked of, is really open data. More than open banking, it's open data. And it is, for example, used for account verification. If I apply for a, say, Schengen visa here in the UAE or Saudi Arabia, they generally ask me for 3 months of bank statement. So I have to go to the bank, get a physical printout, they have to stamp it, and then they have to sign it, and I've taken it to the European consulate to get a visa. Now, players like Tarabat will actually connect to the bank using open data and confirm. And I don't have to, go to the bank, carry information. Instead, they can use an API into the bank and get the data and give it to the consulate without them having any access to it. And that's as far as open banking. So it's more account verification and open data and less open banking in the Middle East right now. And the second one you talked of is digital identity, UAE Pass. I use it very often. I go to any of my biller sites or any merchant sites. I don't have to enter a user ID and password or create one. I just enter my, connect to my UAE Pass, and it does biometric or facial recognition. And then I am able to get into the merchant's ecosystem and transact. So I don't have to worry about login ID and passwords, and UAE Pass takes care of it, and it's fully, backed by, the government, as you saw on the slide. And in Africa, it's largely led by mobile operators, and I think it's some time away. But the slide talks of some of the pilots, particularly the one on farming done in Tanzania. But it's yet to be seen as if that becomes the standard working with mobile operators.
Thank you very much. Moving forward, Lindsay, I don't know if you have something to mention.
Yes, well, we are just about wrapping up, so we can go ahead. For everyone still tuning in, we're a little bit over time. We're just going to take about 3 more minutes to wrap up. So thank you all for tuning in. And Uttam and Mika, thank you. It's been very rich information, a lot of expertise shared. So just to bring it home, if we go to the next slide and just kind of really reinforce the final learnings that we have taken from this research and from this session is, Europe remains at the forefront of regulation and technology development to create a unified payments region. I think Europe provides a good blueprint for a lot of the things that are trying to be achieved all around the world. And instant low-cost cross-border transfers is the next thing that is actively boiling right now and will soon become a reality in Europe. A little bit ahead of many regions. Yesterday, we talked about how intra-regional transfers are almost 100% absent from Latin America in a low-cost cross-border environment. So Europe continues to be the leader there. And digital ID and next-generation fraud prevention is going to be the next wave of innovation that Europe will need to embrace and develop, and that we'll start to see business opportunities there to make sure that all of this movement forward can continue to remain secure, and a lot of unknowns as we move into that next frontier. Okay. On the next slide, when we look at Middle East, I think Uttam did a fantastic job of giving us a summary and helping to understand what's going on in this region. We understand it as the Middle East truly is a hotbed for fintech innovation, with banks being a little bit slower, and I think very unique demographics, right? A high-income population combined with migrant workers from many different countries, kind of combining two different needs for financial services. And I mean, just physically located central to many regions that require money movement. So just a unique region in that sense. Creating multiple public, private, and multilateral initiatives for cross-border payments. So we still quite fragmented and chaotic, we might say. And I think over in the next year or two, we'll start to see that consolidate a little bit. And then again, stablecoin and crypto solutions finding an attractive home here because of this cross-border need that we see in the region and the investment flowing in terms of innovation and fintech. And then the last slide here for us today is looking at Africa, a fascinating region with so much to do. Around 400 million people still underserved by financial services, including mobile money. So while there's been great leaps and bounds already taking place, there's still a lot of work to be done and a lot of opportunity between banks, between mobile money, and other international fintechs coming in to provide that connectivity that the region is looking for. So there's a lot going. This is a very fast-moving region and a region where we have a lot of greenfield opportunity for totally new technologies, new innovations, new partnerships to go after this pie that is kind of still untapped. Okay, so that is our understanding of what's going on and what will continue to go on in 2024. As we wrap up, Uttam and Mika, any last comments you'd like to make on these final lessons? Let's start with you, Uttam. Any last comments you want to leave the audience with?
Yeah, thanks, Lindsay. I would leave the audience with, the Middle East has the highest density and penetration of smartphones on the planet. Kuwait has 110%, Saudi Arabia has 110%. Africa has the highest penetration of mobile wallets. And there's a huge migrant worker, movement from Africa to the Middle East. So the amount of innovation and investments which will go in the next decade to remove friction in money movement and make it easier, simpler, and more low cost is going to be here. So anybody looking to see how things will shape up, then please come over to the Middle East and see what happens between here and Africa, and as likewise in Africa as well, right? For financial inclusion and bringing changing lives of millions of people out there.
Fantastic. Thank you. How about you, Mika?
Well, I think, Lynn, as you mentioned, I mean, I believe that in the case of Europe, for instance, we'll continue to follow what regulator promotes. There is a good collaborative spirit between the stakeholders and the regulator. I think this is something to replicate in other regions. That is not usual. So I think it's something that has to be highlighted and considered. Considering that the majority of the population in Europe is banked, I mean, the biggest opportunities lie in improving the current offering of services from my perspective. And I believe that this aligns with what the regulation actually promotes, such as the case of instant payments, as we saw. I mean, many options because of this will continue to appear and I mean, just to be developed in terms of different schemes, both local and regional. Both, I mean, will emerge, and this will bring opportunities for cross-selling for banks and for fintechs and for the different players, because if they manage to leverage these new schemes and these new solutions, I think that we will see some really interesting integrations, and I think that from Europe, I think that this is really interesting. And as for Africa, I think that I find it mostly exciting especially because there is so much to build in terms of financial inclusion and digitization. But I believe that the biggest challenge and is the stance that the central banks are going to take. So if central banks actually adopt a stance aligned with opening up to innovation, I believe that the growth in solutions and adoption in the coming years in Africa could be impressive. So I think that those are my comments. I think regarding Middle East, Uttam has the word in that, and I think that his
Perfect.
expertise was amazing. So yeah, I think that that's pretty much it of what I think from the different regions.
Perfect. Well, thank you both. And just as a final slide and reminder to our audience, if you have been following our tour around the world, our final session on Asia Pacific is taking place tonight, Wednesday, in the Americas, 8 p.m. Eastern Time, or 9 a.m. on Thursday in the APAC region. So please tune in about 12 hours. We'll see you back here. And so Uttam and Mika, thank you so much for sharing with us your expertise and your knowledge. And everyone, thank you for tuning in. All of these materials will be shared with you via email later in the week. And so we look forward to continuing the conversation. Take care, and we'll see you soon.